Hey, good evening, everyone. My name is Sage. I'm going to be breaking down the trades that I took today and also just the state of the market, what's going on. A lot is constantly changing. We're getting 3, 4, 500 point wicks on the 10-minute time frame, and volatility is rampant, right? So it's all over the place. What you're seeing right now is the VIX. So the VIX from yesterday going into today, we had a 70% volatility expansion once again. So from peak to trough, or trough to peak in this example, we had a 22-point move. That's 70%. Volatility is not going away. It's just not going away. And I don't expect it to subside anytime soon. I'm already very well aware of this, right? This is not my first time that markets are erratic, because they always are. I've made peace with that. But the volatility swings and just the candles are very much something that I'm not used to, or I've seen in the past, but just for example, so you understand what we're talking about. The one trade that I took, I shorted this last night. I mentioned it in the Alpha channel, and I actually took this off early, and I'm going to explain why, because I want to break down every trade. I only took one trade today, just one. But let's just look at how much of a move that we had from an entry on this signal all the way back down here. So just intraday on swing, it's not even swing high, but from a swing here back down to here, that's 1,000 points. It's 5.5%. Those are not typical swings. If you know the relationship between the CBOE volatility index and when it's high, usually with where we are now, we're sustaining above 50, which is insane for me to say. But you're having intraday swings anywhere from 3 to 6%. So it's typical. You're going to have that. If you're an option seller, which I am, I'm not really selling a lot in this environment, because I'm very well aware that whatever tweet, whatever comment, whatever press conference, whatever interview comes out, I know that I'm going to be slapped in either of the two directions. So I'm preferring right now I have preferential favor to futures, because I get in, get out, get stopped, and I go about my day. So what do we have here for the trade that I took? I'm going to break it down. So yesterday, huge move, right? We're very well aware of this. We basically paused on tariffs. So that's why we had the most historic day in stock market history, right? We had 142 million shares that were traded on SPY, and some factor of that on QQQ. But you know what? I'm not impressed. I'm really not impressed. So on your weekly time frame, overall, this is kind of like, you getting excited for a minuscule move after something gargantuan happened. So I'm not really that impressed. I'm sorry, but I'm not. So how much do we have to recover from our current predicament, right? This is where we're trading right now. To get back to where we were just two months ago, we need to recover an additional 21%. Okay, so I'm not that impressed with the 10% rally, especially when we're giving 50% of that rally back the next day. So I'm really not impressed. When we talk about fib levels, I'm going to specifically go over QQQ here, because I'm interested in buying more into QQQ, right? I have positions that I added on to TNA, and I'm interested in buying more shares, because if you're focusing on, this is just some insight from someone that's been doing this probably longer than the average retail trader. I am a retail trader, but I've been doing it much longer than the average retail time span. So look to buy into fundamentals. Try not to pay attention so much to the price, because the price right now, I don't think it's going to be completely reflective on where the value is in the market. For me, the value is where the companies are making money and focusing on their balance sheets. Speaking of balance sheets, the price to earnings ratio, or the ratios that actually matter on Qs and SPY, we're not necessarily at a comfortable, healthy ratio yet. We need to trade actually a little bit lower in order for us to get to those thresholds. So I'm going to put on a fib, right? I've done this in the other videos, but I want to do it pretty consistently as I'm talking to you. Maybe you guys are watching this for the first time. I might get 3 views on this video, and that's fine with me. I don't mind at all. But it's a really good reference and a really good exercise for us to practice doing technical analysis, which I do. I do about half an hour, maybe an hour after the day. Just review my trades, which I only did one. I took a good quality trade, and then I go from there. So when we're talking about pullback areas, this hasn't changed. I have 61.8, right? This is a significant retracement level, and then back down to $385. I'm still waiting for that. But Sage, you're at 446. We're not going to get to 385. That's dangerous thinking. If you were thinking that 2 months ago and you're saying, we're not going to be pulling back 25%, well, here we are, right? So don't think that way. Don't think that we can't pull back from here. It can't get much worse. It can always get much worse, much worse. So those are the areas. Significant bounce because of a pivot in policy. So supposedly Goldman Sachs, JP Morgan, all these bigger players they're having maybe taking off the table that we have recessionary concerns. So I thought that was a whole bunch of crap and a whole bunch of manipulation going on. I don't care if this is a political statement, but there's a lot of manipulation going on. It's just happening. It's rampant. It's all over the place, and it's pretty apparent. And I think it's pretty clear. I've said this in other videos. It's happening all over the place. So what do we have to do as retail traders? Either we're going to focus on the fundamentals on companies that we know are going to survive this, or we're going to try to day trade on the 3-minute time frame and then get slapped with every other little turn. I prefer the latter. I prefer to be in things that I know after about 6 months, 8 months, a year, we're going to be recovering. I know that for a fact, okay? Because why? Well, history doesn't necessarily repeat itself exactly, but as I generally say, it rhymes pretty well, especially when you're talking about the stock market. Cool. So those are just the things that I kind of want to say in this video. Now let's talk about actual concrete levels and some action items, right? Because I like talking about action items. On the 1 hour time frame, in my opinion, retracement levels that I'm looking for, I took that short. That is my short position, right? I made $11,000 on the position, and I alerted in the group. We saw it in the profits channel. You don't have to believe me. That's fine. That's fine. No worries about that at all. But always follow along with the trading system, right? So you guys that are now trying, to trade futures and do this a little bit more on your own basis, pay attention to what I'm going to tell you here, because this is the trading system that I'm using, and it's working quite well. So all of it is ATR based. So ATR is just going to give you a calculation on where volatility is spiking, maybe not spiking. So I have this calculation here. These are pretty precise signals. Are they going to be 100% precise where the candle is at the top and then take you all the way to the bottom? That is impossible to do. I'm doing more quantitative trading than I ever have been ever in my career. And I'm liking what the numbers are saying. I'm liking when I do my back testing. I'm liking and I'm trying to get better at not just detecting where the entry is, but also where the larger moves are. Do you see what I'm saying? So large move, if it was detected and if I held, just looking at what the TWAP is doing. So this is a TWAP trend indicator. It's nothing different than I've been using the last couple of weeks. All it is it's going to tell me, do I stay in the trade or not stay in the trade? So I actually caught this trade long. I reviewed it the last couple of days. I didn't catch this entire move up because this is a new version. There's a new version of the indicator. I just finished it today, actually. So looking at this, I'm using the 1 hour time frame. Well, is it precise off the 30-minute time frame? Let's check it out. Let's put it to the test, right? It doesn't matter if it looks pretty. All I care about is if it works. If it doesn't work, I couldn't care less. So I have a long position here that I would have ate on, had a short position here, probably would have ate on that. But this long position holding that threshold and holding this trend analysis right here, it's not that hard. They're not hard hard calculations. Would have held out for the entire move. So, I'm thinking in the future when we're not dealing with 400-point candles, because this is going to subside. At one point in time, I'm talking more about the day trading side, but this will subside. We're going to be trading in environments where it's going to be back to boring price action, where 20-point move is good enough, right? For me, I'm not interested in 20 points. I'm interested in 80 to 140 points. In this trade, I'm going to explain where I cut, where I trimmed, and then ultimately where I cut, right? It's not that complicated. So check this out, man. Ain't that hard. TTM. TTM picked up on volume. How do you use the TTM? You pay attention to if the squeeze is firing in conjunction with what price action is saying, right? This isn't going to change. If the data is supporting this, unless I can find something that is more pinpoint accurate than what I'm showing you now, then I'm gonna be using that. But for right now, this is probably one of the things that is almost pinpoint accurate, almost to a fault, right? I'm having tremendous success trading like this. I am catching more breakouts than I ever have in my career, and I'm doing it fairly consistently, okay? Out of 10 trades, I'm hitting 6 to 7, and a lot of them are breakouts, just like the one you're seeing here. So I caught this first candle, and then on the shorter time frame, I did take it off. So this is the 10-minute time frame, just in case you didn't watch yesterday's video. There it is, right? So would you have been stopped out about here? Yeah, but the overall trend analysis is telling you, hey, maybe you want to stay in this trade. So ultimately, how many points would I have maybe put myself in a position to have caught? Probably, yeah, you probably would have caught 11%. Okay, cool. So let's actually get to the trade that I actually took, right? Let's let's stop dreaming and living in la la land. Why did I take this trade right here? Well, we started falling off the TTM, did we not? So the way that my calculation is working, this is literally how I would trade. It's just giving me a visual cue. There's nothing, honestly, there's nothing special about what's going on. There's no magic behind the calculation. But it detected movement to the downside, and it detected, you see that right there? It detected a drop in volume. So you got that drop, and it's very clearly cited right here. I actually detected this a little tiny bit earlier. I got in a little bit earlier than this. So I took the position, and what happened? Let's go actually to NQ, because that's exactly what I traded. That detection was exactly where you're seeing it right here. I took this trade, and then as soon as we started breaking up here, I took it off for 140 points. It's in the alpha channel. 140 points is about there. So we broke above the threshold. 140 points, I trimmed the trade. I didn't take the entire trade off because me and my trader experience, I'm saying you can't really follow up a move that's 12 points, or 12 percentage points, I should say, and then not fill some of the gaps to the downside. So I was half right. If you are following along with some of the videos and some of the analysis that I like to do, I like to use a tool called the retracement tool. If you don't use it, that's fine. It's just something that I use, and it's something that might be helpful for us to be more quantitative in our assessments. So I'm going to go from here all the way up here. All right, this would have been the calculation that I actually did when I was looking at this trade and looking to get in, because I knew I wanted to short. I tried to short this trade right here, and I lost $600. That's in the other trade review video that I did. So I lost $600 here, but I made up for it significantly here with this trade. So I tried again. Now that I know the calculation here a little bit better, I know that I probably shouldn't have shorted that trade if we were not showing significant signs of selling pressure. So did we get significant signs of selling pressure here? We did not. Okay, so this is something that I'm learning for myself and learning about holding on to the trade and actually making a decision based off the calculations as opposed to my sentiment. I want to remove, I'm already pretty good at this. I remove a lot of emotions from my trading, but I want to do it almost to a fault. I want to remove 99.999% of all the emotion and just leave the indicator and leave the quantitative analysis to do what it does. So we came up here. I saw we were lost. I saw that we were losing momentum here at the top. As soon as I got the indication from a CVD come in, right? So almost in line here. You can't really see it because it's being trumped by all this. But you have a slope right here. Slopes are important in quantitative analysis. They really, really are. So you might not be able to see this, but there's a little bit of a slope detection right here. So that slope was already telling me we might be pivoting off this momentum. That's what it caught onto. So it caught onto that, and specifically this, right? You guys are not going to catch onto this, and neither am I. But you have some volume that picked up right here. You have a red bar, and then it started picking up. That's where the tree started to crumble, right? That's where you start seeing that pivot point off the fulcrum. So that point of weakness, right, was catching on, and then it just caught momentum to the downside. So where did I hold this trade onto? I held this on to 340 points. It was a 340 point gain. Did I know that we were going to, break down 800 points? No. I wish that I would have held on to it until we got down to 1,200 points, right? This would have been absolute banger of a trade, but I managed this trade correctly. I really did. So as soon as we started breaking up here, took it off for 140 points, and then back here in this threshold, I took it off again, okay? Just took off the trade. The one trade that I took, that's all I need, right? One good trade, one decent trade, that's all I need. So those are the trades. Now, what are we looking at in terms of just market structure, market sentiment? The sentiment still is pretty horrible in the market. Just look at my watch list. Look at my watch list here. All my watch lists are red, right? They're bleeding Bloody Mary. So the prudent thing to do, although we're all underwater with our positions, we're all underwater with our swing trades. I don't know if there's someone out there, if there's another influencer saying, I'm killing it in this market. They probably are killing it as a day trader, but they're not killing it in their long-term portfolio, especially you crypto people. It's been difficult out there. So before you start looking to buy every little thing, I'm still going to use the 5 and 21 rule, excuse me. On the 4-hour time frame, so long as you are holding the 5 and the 21 right here, right? If you're holding the 5 and 21, there is a very good likelihood that you might still be trailing up. I'm going to share with you my analysis and what my opinion is on the indexes. If you care to continue watching, that's fine. If you don't agree, that's okay as well. But I'm just going to share with you my own little analysis off the daily time frame. I was going over this, and this can be documented. It will be documented. Off the 4-hour time frame, for me, I think that there is a huge gap of where buyers were not filled and they were going to drive the price in this swap area. It's either going to be here or I think it's going to be here. Notice that I'm saying I think. I don't know. I don't know anything. I'm just looking for these areas and then I'm waiting for the indicator to do its job. So the indicator told me, hey, go short here, right? That was Liberation Day, whatever that was about. But notice I didn't get an indication here. Why? Because the sentiment, the TWAP, was still saying, hey, we're not over the negative sentiment. So this indicator did very, very well to catch wind of this off of the 4-hour time frame. It really did a very good job here. It waited for the sentiment to change, and then from there, it calculated volume, it calculated CVD, and then from the CVD, that's where it flipped the switch, right? So it's not going to take the first bounce. I made this part of the calculation. Yeah, this is great, but what if it turned here? Probably I would have gotten a signal a little bit higher. It's waiting for the confirmation on the overall trend change. That is very important to me because I don't want to be taking every little low. If I'm jumping on the shorter time frames, maybe on the 1-hour time frame, I would have got the signal, right into that area. I'm now doing backward analysis and I'm fitting price action into my narrative. That's very dangerous. I don't like doing that. I just want to recognize as I'm doing my back testing, is the indicator picking up on these movements or not? In this case, it is. So we trade back down into the swap area. A swap area is going to be a previous resistance area. So this is resistance. This is a double bottom. If we trade back down here, we hold, and then we start pushing, I want to get back in long. The indicator will do that job for me. I don't have to guess. If the volume is there, it will pick it up. It's just as simple as that. Now, if we trade a little bit lower, if we trade back down to 410, which is where I think we're headed, if we fill that gap because all of those other players were left behind, this is a political statement, but only the insiders and the people that were around the current administration and were in on the loop, they're the ones that probably caught this rally. Obviously, that's a political statement. That's just my opinion, okay? If we start trading lower, then that's what I'm watching for from more technical approach to taking the position. So once again, I'm looking for 430 and then all the way back down to 410 for those orders that weren't fit. I'm specifically looking for the only thing I care about. I don't care about anything else aside from volume. If there's not, I've said this for 15 years, literally 15 years. Even before I started trading more in the public sphere. Always pay attention to volume. Now I'm paying attention more to volatility. So volume and volatility, the two vols, are the things that I care about the most. I didn't care so much about volatility back in the day. Now I do because it's an extremely important part of quantitative analysis. So looking at this, those are the things. So that's the short position right there. It's as clear as day. All right, so we're good. Now, what are we waiting for on SPY? What do you think I'm going to say on SPY? I'm going to say the same thing, right? Price action, all of the PA that you're seeing on basically all of the mega caps, it's all the same. I mean, take your pick. I'm going to be doing leverage shares. Some of you are in our Discord and you're like, oh man, I'm holding on to these positions and these leverage shares are killing me. Are they killing you? Are they really killing you? Or do you want to just try and time the bottom? If you're thinking about timing the bottom and you want a perfect entry, you're going to be miserable for the next couple of weeks or the next couple of months. If you think about, and this is some advice, if you think about valuation fundamentals and thinking about buying things that you know will outlast all this bullshit, then you will be fine. That's what I'm doing now, right? So I know that we're going to outlast on the ETFs. I know that for a fact. Now, it's all about how much am I willing to sacrifice in terms of just my mental health or my financial health, because that's important as well. How much of a drawdown can I suffer before I say, I'm out of the game? I know where those points are, right? I know where those pain points are for me. Technically speaking, on the 4-hour or the daily time frame, how low can we go from here? In my personal opinion, doing the retracement levels that I like doing, I'm going to put the retracement levels here just in case you're watching this or my analysis for the first time. We'll do the fibs. We'll do it from this point. Let's see exactly how low we can go. 61.8, but I'm thinking we can go as low as $450 on SPY. Okay, we're trading right now at 534. If you think that I'm out of my mind and not considering 450, that's okay. But it is in my overall analysis. It's not going to be surprising to me if we get to 450. There's a whole bunch of volume with these last couple of candles. I'm very well aware that buyers are on edge, right? They're just waiting to get a deal. They're waiting to get to get a buck. Everyone right now, including myself, we're all coding to make sure that if we see some volume spike in, we're looking at whatever quantitative or algorithmic analysis that we're using to be able to detect that. So we can go in our phones, we can look at our volume, and then we can catch wind of some of that move. We're doing that. All of us are doing it. Every trader should be doing that. You guys should be doing that as well. Wait for those volume spikes to come back in and wait for something fundamental to change. I'm pointing at my TV because I've been watching CNBC quite consistently. So what are some other recommendations that I would bring to the table? I'm going to recommend Apple. I'm not going to recommend anything that you've never heard of. The only thing that I'm going to say is that all these that I'm mentioning, I'm going to buy the leveraged ETFs. That's where I'm at. I'm okay with the risk. I'm okay with another 30% drawdown from here if that means that I'm putting myself on the horizon for 120, 150% gain, right? I want to outperform the S&P and I want to do it in a very, very big way. So Apple will be leveraged. The areas for Apple that I have are currently where we are, 173. Lower than that would put me at 155. And then lower than that puts me at approximately 135. The only other thing that I'm going to bring up in this video that I haven't talked about before, Amazon is another one. So I'm going to go over Amazon real quick, just some quick levels. Amazon is going to be 165. I'm going to introduce the voodoo lines here. So I have 183. No, I like 165. So 165 and then all the way back down to 150. I'm going to agree with that. So 150 is where I would look to buy into Amazon if we do start trading lower. So I know that that's a stretch from where we are, but personally, those are some of the levels that I'm looking for. The only other thing that I would recommend that I talked about today is going to be SOXL. I'm not terribly interested in SOXL per se for too much of the long term, but this is very interesting. This is extremely accurate information. Right? We have to pay for this volume information. This is a huge amount of volume that came in specifically for those candles. If you let me give you better context of this. The context of this off the weekly time frame, that's what I'm talking about. There was a massive amount of volume that came in on SOXL, and I'm not even being I'm not using hyperbole at all. The amount of volume that came in right here, look at this, man. That is what, 10 times its regular volume trading. So it's absolutely massive. You can even see it here on TV. Probably I should show you on TV because it's more accurate. There is a huge, absolutely gargantuan amount of traders that are looking at SOXL. It is absolutely massive. This is what capitulation looks like. You're seeing elevated volume all across the indexes because people are interested in getting the best deal. So are we, right? We should be interested. We definitely should. If you're participating in the market every single day and watching it, you definitely should be interested. So that's what we have right here. So what am I waiting for on SOXL? Specifically in terms of levels, I'm going to give you a level that I'm watching. Level I'm watching right now is about $6.50. The last time I took SOXL, I bought it at 8 and I sold it at a multiple of 8. I want to try to do that again. So yesterday it jumped 50%. If I can get a sweet deal on this, and if I have a detection on this already. Don't think that I don't. I'm already thinking ahead of you. So I have alerts on here that it's going to tell me, all right, so when we're looking at a buy signal off of the 1 hour time frame, I'm probably going to signal it long, okay? So SOXL is going to be in my wheelhouse. That's all I have for today. If you have any questions, please let us know in the comment section. But all in all, I'm going to be working on just improving what it is that I'm doing. I'm very excited about what there is to come, and I'm very excited about getting more people involved in futures trading and trading a little bit more using, I would say, quantified analysis as opposed to looking at RSI, MACD, and looking at things that lag a little bit when you don't have an edge in your overall system. That's what I'm doing. I'm always going to be chasing alpha. I'm always going to be chasing an edge and looking to perfect our system a little bit more collectively and using a lot of the feedback that we get from our traders because our traders are our family. I seriously look at them that way. They might not know it or they might not feel that way, but for me, I definitely treat these people like they're my family because to me they are. They truly are. I truly love the people that are in our community. They're in this for the long haul. They're hurting, and we have to do our job in order that we take care of our people. So that's where I'm at, and that's why I've undertaken this project. Okay, that's all I have here. Thank you so much for watching this video. I'll do a breakdown of trades if I take any tomorrow, and then we'll talk a little bit about the state of the market and the economy. If anything changes tomorrow, which I don't think that it will. Honestly, I'm frustrated with it. I'm sure you are as well, but we got to take it one day at a time.